Today, we're going to unpack a story that's about so much more than just numbers. It's really a story about a country's comeback, a high-stakes pitch to the entire world, and how just one single transaction can signal a huge shift in global confidence. So, let's dive in.
You know, that's a massive question for any emerging economy, right? Is it about giving big policy speeches or putting out optimistic forecasts? Well, sometimes the most powerful proof, the most decisive vote of confidence, comes directly from the global market, cast with billions and billions of dollars.
Okay, so let's get right to the heart of it. South Africa stepped out onto the world stage to borrow money by issuing a brand new US dollar sovereign bond. Now, this wasn't just some routine transaction. You can bet the world's biggest investors were watching very, very closely.
And wow, the results came in fast, and they were crystal clear. This new bond offering wasn't just a success, it was a massive vote of confidence. The demand was just overwhelming, and it sent a clear signal of renewed faith in the country's financial direction.
But here's the thing. The real telltale sign of success was who showed up to invest. We're talking about the big, cautious players here, global asset managers and huge pension funds. See, these aren't speculators looking for a quick win. They're looking for long-term stability and credibility. Getting them heavily involved, well, that's the ultimate stamp of approval. Now, to really grasp the scale of this achievement, we have to understand the environment it all happened in, because this was absolutely not an easy time to be asking the world for money.
The whole mood in global markets had shifted. Investors were becoming extremely picky, scrutinizing every little detail, and basically separating the world's economies into two distinct camps. And believe me, getting placed in the wrong camp could be financially devastating. And this created a really clear divide. On one side, you had the in crowd. These are countries seen as credible, disciplined, a safe bet. On the other side, you had the out crowd, viewed as high risk and just full of uncertainty. South Africa's big challenge was to prove decisively that it belonged in that first group.
And this single sentence, coming from market observers, pretty much delivered the final verdict. The bond's success was absolute confirmation that global capital now sees South Africa not as some risky bet, but as a credible, disciplined player on the world stage.
So, how did they pull this off? Well, it definitely wasn't luck. This was the result of a very deliberate strategy, with clear, tangible steps that were all designed to rebuild that investor trust, piece by piece.
It all came down to three key pillars. First, fiscal consolidation, which is really just a fancy way of saying they got their national budget under control and proved they could be disciplined with their spending. Second, revenues were looking better than anyone expected, showing the economic engine was humming along. And third, the central bank was sending out consistent, clear messages, which gave investors the clarity they needed on things like inflation and interest rates.
When you put all those actions together, they did exactly what they were meant to do. They systematically chipped away at any doubt and completely rebuilt South Africa's reputation in the eyes of the world's most important financial players.
Okay, now we get to the part that really matters to everyone, not just government accountants. The success of this one single bond creates this powerful ripple effect that can actually help lift the entire economy. It's pretty cool. To get this, we need to quickly understand the term called the sovereign benchmark. The easiest way to think about it is like the foundational interest rate for the whole country. When the government can borrow money more cheaply from the rest of the world, it sets a new, lower bar for pretty much everyone else back home.
And here's how that domino effect plays out. A lower government benchmark means local banks and state-owned companies can also borrow money for less. That in turn means large corporations can get cheaper funding for new factories, new projects, and yeah, new jobs. It's basically the fuel for investment across the entire system.
So let's zoom out one last time. What's the big takeaway from this incredibly successful financial move? What does it really signal about the country's place in the world going forward?
At the end of the day, the ultimate message is this. South Africa has proven that it still has access to those deep, deep pools of long-term global capital. And in a turbulent world like ours, that kind of access is a massive strategic advantage. It's what allows a country to fund its own future.
And that leaves us with the most important question of all, doesn't it? This bond deal wasn't the end of the story. It was more like the beginning of a whole new chapter. All that hard work restored global confidence. The real question now is, what will South Africa build with it?